The current macro environment is scary, quote unquote, and not at all supportive for risk assets, according to our next guest, Haouk Lee. However, there may be some pockets within the crypto sector that may offer shelter. Haouk Lee is the CIO and founder of Trinity Digital Assets, and we'll be talking about all things cryptos, how to hedge with cryptos against the coming storm, and the sectors and protocols that might see the most investment potential this year and beyond. Haouk, it's your first time on Kitco. Welcome to the show.
Yeah, hi, David.
Haouk, it's a pleasure to speak with you. I've seen you on a number of other media appearances. You've got a fantastic background. You've started investing for your family office right after Harvard Business School. Tell us about what you did after business school and your transition into the digital space.
Right. So I've been an asset manager all my career. And before my way down the rabbit hole in crypto, I've been basically investing in real estate and in emerging markets. And from 2016, we decided to, take exposure in crypto assets. But we were waiting basically for the market cap to be about 10 billion, because that would provide enough liquidity in terms of the amount we wanted to scale in and put to work. So from 2017, we've been scaling into BTC and ETH, and over the years we kind of use a four-pronged strategy in terms of playing this market, which is hodling the BTC and ETH that we've accumulated, maintaining an active liquid token trading book, and playing the DeFi yields market for markets like these. And the last component is obviously just kind of a pro bono counseling of other family offices and institutions on how they can play this space.
I'm just curious as to the kind of feedback you received from either your family or your friends or your other investors who are probably say to you, Haouk, at this time you're switching from real estate, which is a very low volatility sector, into Bitcoin. That is not a transition. That is not like a lateral shift. That's basically from a completely different sector to another. What kind of feedback did you get?
Well, I think it depends on what kind of real estate you're doing. We were doing basically a lot of residential development real estate in emerging markets. So, not only did we have were we getting the current income in terms of the rents collected, but we got kind of the tailwind of the exponential rise in the land prices, which provided the alpha for us. And the basic reason why we went into crypto assets was over the years, I was looking at kind of the exponential returns, and it was just outperforming every other financial assets. And kind of given the long-term duration outlook of a typical family office, with the network effects, with more time, there's going to be more network effects, and Reed's law coming into play. So it was kind of the perfect asset for us to venture into.
Let's talk about the macro environment first. So you told me offline that this is a very scary macro environment for investors. Right. And a lot of people do agree with you. We're speaking on Tuesday today. This is the first day of the Federal Reserve meeting in the US. Tomorrow, they're going to release their meeting results. Now, it's expected that they will hike interest rates by 50 basis points this week. Markets have not been reacting well so far to the news. Big sell-off last week. Now, this sell-off in risk assets has been continuing since last November, ever since the Fed has hinted at a tightening of rate hikes last year. Now, as an investor, you're looking at this macro environment and you're still in cryptos. Why the dichotomy?
Well, I think it's clear we're heading into uncharted territories. It's very uncomfortable. I think no one would argue that we're kind of looking at entering into a recession. But even within the crypto space, what you can do is, outside from your long-term holdings, you can be kind of on the side in stable coins. And, in these kind of choppy markets, I think, one of the things you could do is try to get yield on your stable coins. That's risk off. For example, you could, the most simple thing is you could do is use your stable coins to buy US Terra, which is an algorithmic backed stablecoin within the Terra ecosystem, and stake that in Anchor, a protocol called Anchor, and get 18% return on a stablecoin. I mean, that's kind of more on the safer end of the risk spectrum of how you can kind of be on the sidelines until you get more clarity of and visibility in terms of where the macro market is going. Another thing you could do is, if you're comfortable playing it, is since we've been range bound in terms of the Bitcoin price, if you have kind of a view in terms of the lows and the highs, is to sell covered calls on your BTC or ETH, or even SOL, which has enough liquidity. Or if you're going to be a perpetual buyer of Bitcoin and ETH, like Michael Saylor is to sell put, and because you're going to be a perpetual buyer.
Right.
So those are the two, I think, safer strategies you could use in an uncertain market like this.
I see. That strategy sounds a lot like just trading stocks, right? The same covered call option strategies could be applied to hedging your equity positions. So
right, but except that in crypto, as you know, the implied volatility is much higher.
Right.
So the premiums you're going to collect is going to be higher.
Okay, I see. All right.
Yeah.
Actually, that's very interesting. Let's just drill down a little bit deeper. So where are you going for these options exactly?
Well, you could go into an exchange like Deribit, which is the largest options centralized exchange. Or if you don't feel comfortable expressing a specific view in terms of looking at the order book and figuring out how long you want to play, 2 weeks, a month, 2 months, 3 months, you could go into actually a DEX. And what's popular now is kind of these option vaults that pool these funds from different investors together. And so that's kind of a more, I guess, an easier way of playing the options market and getting some yield for your assets.
Your overall strategy sounds very defensive to me. Is your overall macro thesis that risk assets, including the NASDAQ, for example, are going to fall this year for the remainder of the year?
Yeah, I think the only red herring we can look forward to is if there's a demand destruction, and that brings down inflation on a massive scale, and that enables the market to kind of turn on a dime.
How bad could the market get this year?
Bitcoin kind of has a mind of its own, so that's I think the very optimistic scenario. But overall, yeah, I mean, it would be. I think it would be prudent to kind of stay on the sidelines and see.
Well, how bad could the market get this year?
For example, for Bitcoin?
For equities.
Well, equities, I don't really have a view because I don't play the S&P or the NASDAQ.
Well, sorry, I'm asking you equities because the assumption is that the Bitcoin price, which has been so far correlated with the NASDAQ, for example, that correlation will continue to hold. So I'm just sort of asking you as a proxy, but yeah, we can talk directly about Bitcoin, whether or not you think Bitcoin will stay at current levels, or if you think that a more downside could be seen.
Sure. I mean, Bitcoin and ETH, there are times when things are scary, it's at a correlation of 1. But I think as we kind of zoom out and go to a medium-term, longer timeline, we detangle it. There's less of a correlation. In terms of the Bitcoin bottoming out, I think it's pretty much, barring another, unless Putin decides to detonate a small tactical nuke in Ukraine, I don't see another black swan event that would bring us down to kind of the lower 30,000s that most bears have been claiming. I think that we might like a short wick or two, but my personal view is that it's very well defended, this bottom that we have right now.
Mm-hmm. Yeah, barring a nuclear strike from either NATO or Russia, yeah, sure. No, maybe the war won't escalate. But what about on the supply chain front? In China, for example, they're completely locked down still. I know you're based in Korea, but how's the sentiment over in North Asia right now? Is there concern that COVID could come back and we could see another round of lockdowns on a large scale?
Well, it's hard to predict exactly what the CCP is going to do, but I mean, they have this very high sensitivity for any kind of a small outbreak and really locking down the whole cities of millions of people. But in the other markets, I think we're kind of entering it as more of an endemic. So the movement of people is free in terms of travel between countries. I think people are a bit more upbeat. But certainly, yeah, as you said, China is. I think if you look at the leading indicators for the Chinese economy, it's definitely on its way down.
All right. Well, we talked about hedging against potential downside. Let's talk about the upside now. You told me in another call that you foresee 4 catalysts that could potentially push up the entire crypto market. Let's talk about that.
Sure. I mean, I think the biggest catalyst for the whole ecosystem would be the ETH merge that's slated to happen. I mean, according to the latest Ethereum core developer call, they've kind of declined to delay the difficulty bomb. So probably sometime in September would be an educated guess. But those core developers are very conservative. They want to get this right, and they want to ship the right product. And as you know, people have said that it's like changing an engine on an airplane while it's in the air. So I think the ETH merge would be a huge catalyst, because the reason why I say that is the proactive capital has been able to kind of value the price of ETH, because post merge, as you know, when Ethereum goes from a proof of work to a proof of stake protocol, once you stake the ETH, you basically become, if you look at it in terms of an equity lens, it becomes a stock with a dividend yield. Currently, if you stake the ETH yourself, you're getting about 5%.
Yes.
If you stake the ETH through a service like Lido or through a centralized exchange, they take about 1%, so you're basically getting 4%. So you can look at it as post-merge ETH as a stock with a dividend yield, or it could be a convertible bond. It'll be basically the world's greatest bond, because post-merge, if you run the numbers, that staking yield, which is not paid out in dollars, which is in a debasing fiat currency, it's paid out in ETH. That could conceivably go up anywhere between 10 to 15, 16%. So, what you have to remember is that if Standard & Poor's or Fitch was to rate ETH as a company, as a corporate, in terms of their cash flows, all the revenues flow back. There's basically no overhead, and all the revenues flow back to the stakeholders. And if you do a discounted cash flow analysis, it's very simple to do. Then that tells you, on a conservative basis, just taking a very conservative, PE multiple, it's right now ETH is at about $2,830 as we speak. If you do a DCF, we're looking at basically a $10,000 ETH with no terminal value assigned. So that kind of tells you how undervalued this is. And so
your fair value of ETH
gets out amongst the investment community that, wow, this is the world's greatest bond, or this is the world's greatest stock with the greatest dividend yield. Then the reactive capital is all going to flow in.
Yeah, we're going to come back to ETH.
That's going to create tremendous demand.
We're going to come back to ETH staking, and I want to ask you more about your DCF here. But
just last point on the ETH is that post merge, it becomes a deflationary asset.
Yes.
In the order of -1% issuance per year.
Yeah, we're going to come back to that. All right. So your other 3 catalysts. So ETH 2.0.
Well, the second one that we're seeing in Asia a lot, starting with Asia, is the corporate treasurers of these major firms are starting to, try to get yields on their short-term working capital loans using DeFi protocol. Instead of getting the low 1 or 2% from their banks, they're going for the they're aiming for the 8 to 12% yield they can get on DeFi. And once they get comfortable using those protocols, word spreads around, and so that could the adoption of DeFi amongst corporate treasurers, starting out in Asia, going to North America, potentially Europe, that could be a big catalyst in terms of new liquidity being provided into the crypto space.
Okay. And the two others?
The two others obviously is going to be the spot Bitcoin ETF in the US. People are pessimistic that's just going to happen under the Gensler administration, but
yes,
you never, I think if it does happen, it'll be because of political pressure. Again, that'll provide a great on-ramp for people that are not.
I guess institutional. Yeah, I guess institutional investors who are mandated to not, they aren't able to buy Bitcoin directly, but they have to go through an ETF. I understand. All right, and
the last one was basically the liquidity of Bitcoin. The last chart that I saw on Glassnode was that there's currently about only 12% of the circulating supply of Bitcoin on centralized exchanges.
Yeah.
And when I talk to the OTC desks, there's just not enough liquidity. So what's happening is a lot of the institutions, they're buying it and then taking it off and then putting it to cold storage. So in terms of a supply shock, I think that could be coming towards the latter half of this year.
Okay. You were talking to me also about crypto sectors that could turbocharge adoption, right? Which sectors are you looking at right now?
Well, I think midterm it was kind of the unforeseen use cases like NFTs, but I think if we go out 6 months, maybe towards the early next year, that's when kind of the development for the kind of AAA rated, AAA equivalent crypto games are starting to kind of come online and gain traction and bring kind of the users into this ecosystem. Then we'll probably have a few blockbuster crypto blockchain based games that's coming online. That'll bring new users into the space.
Excellent. Let's go back to ETH 2.0. Okay, so in theory, yeah, you can stake ETH and earn a higher yield. How do you actually go about doing that? I think the average layman is probably going to have some trouble, right? Can you explain the mechanisms here?
Sure. I think the easiest thing is if you already have crypto, is to go to your exchange, because most of the exchanges are starting to offer that staking service, and obviously you have to pay them. I think I've seen on average about 1% fee. Some exchanges actually give you a synthetic ETH, so that while it's being staked, you can do you can kind of get liquidity for your staked ETH. If you don't want to go the centralized exchange route, then you could go into a staking service, like I said, like Lido, which is the biggest ETH staking service as of now, and stake it through there. You'd have to pay, I think, around 1%, but I think they give you kind of a synthetic ETH that you can use and do other have uses for that.
So your fair value based on a discounted flat cash flow model is $10,000 for ETH, and that's assuming how much yield?
Well, no, that's assuming post-merge that all the fees go back to the stakers, as well as the stakers, because post-merge there's not the miners anymore that's securing the network. Right.
All right. Well, as you've probably learned in business school, your DCF doesn't tell you exactly when that value is going to be reached, but do you have a rough idea as to when and how that $10,000 can come about the market?
I think it's pretty easy to project out, because if you go on Glassnode, it shows you kind of what the latest monthly revenue for Ethereum is. So you can just can plug that into an Excel spreadsheet and then work on from there. And what is that? Ethereum doesn't really have any overhead, so all those fees post merge are going to flow back to the stakeholders.
When can we see?
Yeah, we already know how many ETH are in circulation. That's also available on chain.
Right. So when can we see 10,000 ETH? Is it this year, next year, 5 years?
Well, I mean that's really hard to say. I don't think anybody knows for sure. Right. But what I do know is that post merge, when the reactive capital kind of looks at the yields that staked ETH brings, then they're going to start. I mean, you could see kind of a mini FOMO into that,
right?
Because what kind of non-fiat based asset is going to give you north of 10% yields.
You're the first person I talked to who actually applied traditional valuation metrics like PE to a crypto.
No, actually, there's a guy called Justin Drake. I
haven't spoken to him, but yeah.
Yeah, he's basically the lead at the Ethereum Foundation that's kind of coordinating the ETH merge process, and he's the one that kind of fleshed all of this out.
Right. Okay.
So and so I think that kind of provided impetus for everybody that is used to kind of doing the DCF analysis to kind of work their own models and plug in their own assumptions. But I think it's very straightforward because all those inputs that you need are available on chain.
I'll definitely look into that. Thank you for that tip. Bitcoin. Have you done similar analysis for Bitcoin?
Well, I think Bitcoin you can't do, right?
Right.
It's kind of hard to do a DCF on Bitcoin.
That's interesting. I guess if Bitcoin can, I guess if people build smart contracts on Bitcoin, and then I guess there's some cash flow revenue generated from smart contracts, but I think that's a minority of users, right?
Yeah, exactly. I mean, maybe for the Lightning Network it could. But I think the problem with doing a DCF for Bitcoin is doesn't provide any cash flow to the holders of Bitcoin because it's proof of work. It's not proof of stake.
Unless you I guess put it in a yield farm, but that's different.
That only pertains to that specific protocol.
Exactly. Well, generally speaking, for Bitcoin, we'll wrap it up here. What are the biggest drivers of the coin, and do you see? Like you predicted $10,000 Ethereum, if you were to assign a fair value for Bitcoin, what are the macro drivers for that value?
I mean, for Bitcoin, I'd say it, when we kind of decouple and we have more visibility and clarity in terms of where the whole world economy is going at a macro level.
Okay.
Maybe this time, because you remember last year, David, every pundit, every expert was saying, oh yeah, by year end, we're going to see 100K Bitcoin, right? But
yeah, that's
happen.
right. Yeah.
It didn't happen, Plan B model, stock to flow, all of that, right? And then we're kind of down to where we were. Year on year, we really didn't have much in terms of price action. But I think at a general level, as more money from all different sectors of the world economy flows into crypto, then obviously Bitcoin is kind of the sun in terms of the whole ecosystem. So that would be a positive catalyst because all the major institutions, when they're constructing their portfolio, they start with Bitcoin. So Bitcoin will be the receiver of all those capitals flowing into the ecosystem.
Great. Well, Haouk, that was a very enlightening talk. Thank you so much for your analysis, and I learned a lot. Thank you again for coming on the show. I'll speak to you next time.
Great. Thank you, David.
Thank you for watching Kitco News. I'm David Lin. Stay tuned for more.